What's up, Team Tackle? This is Coach Matt, and I got two amazing coaches with me here today to help guide us through another edition of the fantastic program known as Trade Masters. Before we get too deep into the woods on round one and round two, just very quickly, what Trade Masters is. Trade Masters, we bring on a couple coaches from Tackle Trading, and we go through two rounds. Both coaches pitch a nice little trade strategy, pick, swing trade, position trade, you name it. And then we have a little bit of a discussion on which one we like the most for the team. And before we get too deep into that, we do have a little bit to talk about in the market here today, as the market is showing a little bit of crabbiness. Now, very quickly, over the next 24 hours or so, we do have some news coming out in the market. First and foremost, Micron earnings was fantastic. So we did see some bloodbath a little bit in the AI trade right now. We're seeing a little bit of sell-off in the NASDAQ as well, but we got Micron coming out here, boys, and we got a juggernaut happening on Micron. They beat everything. They beat everything for every other company in the AI space. EPS 20% beat on EPS. Revenue was up for 56% year over year, but a whopper of a guidance report coming out. This was the best hat trick of the third quarter so far. This was an amazing report. Can they put a little bit of stopgap in the sell-off in the NASDAQ? That's going to be something to talk about coming into tomorrow. We'll have to wait and see on that. With that said, Frankie, what do you got going on in round one here? And I'm gonna have
Ooh,
to
yeah.
close up my video as
Yeah, you
it is
frozen
giving
time.
me
I mean,
all sorts of
just not
problems here.
happening. Some days it's just not meant to be. You were
That
froze.
video was giving me issues yeah, before then, so I apologize for that. We tried to make it work, but it's just not going to work here today. So we're going to blank screen for me, but you two, let's go ahead and get into round one
There we
here.
go.
That was
There we
driving
go.
me crazy. It was like giving me a flash here, Frankie. It was driving me absolute nuts.
Yeah, it was good.
Um,
Yeah, at least it froze you with not a particularly dumb look on your face. Like usually when I get
Listen,
froze, I'm like making the world's
There was
dumbest face,
there
right?
was last week Mark got frozen with one of those looks on his face, and I'm very thankful that I didn't get the frozen dumb look. That does happen, and I'm thankful for that it didn't. If you have not yet registered for the Tackle 25, definitely do so. I just started the research. It's going to be an awesome list. We're going to be talking about that next Monday, December 22nd. You can hit the link in the description below if you are interested in attending the Tackle 25 covered call webinar next Monday
Spoiler
night.
alert, you are interested
It's
in it.
it's
Spoiler
it's
alert.
it's my favorite webinar to teach. Absolutely,
It's a great
absolutely.
webinar every year. It's a great list every year for cash flow, but there's also some pretty legit growth that comes out of it.
Yeah,
You don't want to
well,
miss
the
it.
scoring system takes into account both value and growth is what it does. So, anyways, we'll have that conversation next Monday. For today, boys, downward pressure and price here today. Not exactly an all sell everything moment though. When you're looking at the indexes, you got the S&P obviously has a bear lean here. The Nasdaq obviously has a little bit of a bear lean here as well. But when you go in to look at the cyclical areas, a doji upward move in price would confirm a pullback in the Russell 2000, and the Dow Jones sitting right at that key level of old resistance, new support. Can it also doji? So don't let the NASDAQ and the ES weighted indexes fool you. It's not giving the truth of the entire market out there. Traders market out there. I got two traders here today. Let's get into round one here, Frank. You go first. What do you got for us?
Ooh, let's do it. You know what? One of those areas that stood out is finance. So I'm going to go with CMA in the financial space. This has a lot of things that I like as a trader. One, it's got a relatively strong sector. I don't think you can argue that. Go look at XLF versus most things. So the sector is pretty strong. The overall cyclical move feels like there might be something going on to it. Couple that with, even if you don't believe in that part of it, just a pretty clean little orderly flag over the last few days with an inside doji here today. So simply meaning today's candle was inside yesterday's candle, right? Where all-time highs recently broke out of everything. Most recent earnings really got the party rocking and rolling. So Clearly, the investors aren't hating on that most recent report. Easy, cheap risk play. You build it off of yesterday's candle, entry above it, stop loss below it. You expect the nine will catch up, assuming it does trigger. You would assume that the nine catches up within the next day and a half. So that would be working for you relatively quickly. These guys, I actually lied, Maddie. They aren't at an all-time high, but they are in a giant window to their all-time highs. Their all-time highs, they've double topped, going way back over the last decade in that $100 level. So there has been a pretty good history of these guys coming down, then working back to 100. It's got a good sector. It's got a great little cheap risk pattern, right? I don't have to risk a lot to take a shot here. 100 might be a bit extreme for a swing trade. So the way I'm handling this is I'm setting up T1 around 92.50, which is basically an ATR above this recent swing here.
Mm-hmm.
That's going to give me that 2.5 to 1, probably a little bit north of that, but roughly speaking, 2.5 to 1 risk to reward ratio. That's kind of a wimp's target. I'll grant you that. If this flag confirms, I would expect that it gets there. And then I just think you kind of manage. I don't think 100's probably fair for a swing trade, but at the same time, I don't see any reason why the conclusion doesn't end up there. So does momentum stall at 93, at 94, at 95? I don't really have a strong opinion there. So I think once you kind of get to that 92, 92.50 level, you kind of play at momentum and see how close it can get into that $100 level. So easy build, good risk to reward, strong sector, not really much to not like, in my opinion, on CMA here.
Yeah, good little setup here, Frankie, on the flag here. You see that flag kind of just sitting right there above that 9 EMA, little 3 bar flag there. I set it up in the active trader where the orders kind of where you were thinking where those orders were going to go there, just to kind of give people a little bit of a visual based on what you were talking about. And what you're doing is you're just kind of playing this little 2 bar
Yep.
momentum change is basically what you're doing. And when you kind of pull it into that hourly chart here, when you're processing a flag, you see this nice little trend line coming down. Two things. You want to see a nice little 45-degree angle down here. That's what you got. And then on the last 2 days, you see how it kind of flatlines right there. That's a pretty good look when you're dealing with a little bit of a flag-based pattern. The candle story, I taught Master Trader this week, Frankie, on Monday and Tuesday, and we spent quite a bit of time talking about candles, the different classifications of candles. This is a really good, compelling story on the candle side of the equation. Even got volume kind of just sitting there ready to go pump. And so good setup here, Frankie. I like the flag. 100 to me also feels a little bit aggressive on a swing, right? But there's also nothing above 90 really until you get up into 100 that
Yeah,
is
that's the thing. Yeah.
of significance. And when you look at that weekly chart, I kind of feel like magnet theory, right? There's a little
Yep.
bit of a magnet up there at that $100 level. And so obviously a momentum situation on Comerica, finance looking pretty good on the QE trade that got kickstarted. And you get a pivot on the Dow Jones, you get a pivot on the Russell tomorrow. This thing's going to look good in my opinion. That's good find. Like it, Bobby.
Yeah.
Let's go to you in round one. What do you got in comparison to Comerica here? Bull flag on Comerica. What are you going to come with?
Yeah, absolutely. The next one I'm going to come with is HBM, which is Hub Bay.
Yeah, we've talked about Old Hud Bay here at Tackle a few different times over the
Yeah.
last
Yeah,
month.
it's been mentioned a few times during Trade
Yeah.
Masters. Aside from, finance being one of the top from an RSI perspective, I would say materials is, next in line. If you want to pull up XLB, despite the volatility we've been getting in the market in this little rotation, materials has been holding up. You have been getting a little, bounce here. Did get some volatility the last couple days, but it looks like it's wants to pivot here, at
Hmm.
the zone back up to this 46.50. So, overall, I think materials is a good way. Like I said, is the second, best other than finance. But when you're looking at Hub Bay here, I think the story really is told on the monthly chart, for me. Um, you do got a high base on the daily, but this monthly chart, I mean, It's hitting right up against this 19 zone, and that 19 zone's a big resistance. So if you can get above, that resistance zone of 19, the sky's the limit from there. You can run back all the way up to 40. And now I know that's a little bit of aggressive, but that's kind of where my head's at and where I will run it to, if it breaks. But for me when you're looking at this chart, and you had a nice little the high base here on the daily chart. For me, it's just a straight, simple swing trade. Buy over the entry, which my entry was, I think, 1937. I was looking
Mhm.
at stop loss. I was looking at below like 1843, which is below that 1850 candle. I think the low is of today's candle.
Yeah, I
So
would say, looking kind of at that 1840 or underneath this cluster here. So
yeah,
pretty good intraday levels. And I
yeah,
love what you're doing here, Bobby. You're looking at that intraday side of the equation, which a lot of swing traders, they don't do that. They kind of process everything on the daily chart. I think it's a mistake when you can kind of go into the intraday and it tells you a very compelling story. Where
yeah.
are those demand zones? And if you see a very clear demand zone like you do right around 1850 over the last couple trading sessions, get that stop loss based on your personal role underneath that demand zone, just in case it goes down there and snaps back. It gives you a level that has been pretty consistent for the buy side of the equation over the last couple trading sessions.
No, absolutely. And some people might have a rule when it comes to stop loss. They want the nine. For me, the nine's going to be catching up here, even if you put it, just below, right at that 1843. But if you have to go below the nine, that's a not viable options. It's right there. It's not
Mhm.
going to, push the needle too much from a risk reward perspective. But target wise, just going back onto the monthly, that's where I was kind of picking my targets. I was thinking more because I mean, you do have some stuff around the 25-ish zone. So I was looking at like T1 being like 23, kind of right into that cluster.
Yeah, I think you could go anywhere from 23 to 24. So
Yeah,
23, good number.
and then 25 and the 26, which should give you that top range of that, resistance there. So, pretty, I think that's realistic, especially if you break this 19
Mhm.
resistance. But, yeah, I mean, Hud Bay, like I said, we've mentioned it a few times.
Yeah.
It's one of the, kind of get back up there. So a little swing trade could get us there.
So I know you were thinking position trade here as well, correct? A little bit
Yeah,
long
I
term.
mentioned position trade because I
Yeah.
mean the way I was thinking, I mean you want to wait for that break. I mean because this is a big resistance zone here, so you do get that break. You can add a few just to make sure that it does want to go up. So you add a little bit and then maybe add more on the follow through, kind
That
of like a
longer term
scaling.
that longer term chart is a very compelling chart.
Yeah,
Absolutely.
And you mentioned, asking 40 is a tall ask. Asking 40 for a swing trade is not an appropriate ask. And I think we
yeah,
all know that. But when you look at the longer term side of the equation, obviously not just talking swing trade, but when you look at the longer term side, that's a very similar ask than when we broke out of that multiple time frame at 10 and it got into 19. That's a
very
big
true.
time move there. And so when you're talking 20 to 40, 10 to 20, 20 to 40, it's kind of the same
Yeah.
percentage move there. And
Yeah,
so, yeah, is 40 out of the equation when it comes to looking at the short term? Of course, there's too much to navigate in the short term, but there's not that many levels before you start working up there. I mean,
yeah,
you get into you break out of that 19 level, that kind of where you were talking with your trigger. There's only about, like, you would say this is the same zone of resistance on the weekly chart. Then you
hmm
have 30, then you have 36, then you have 40. Like
yeah.
this feels like it wants to walk up the stairs. I like the swing trade, but I also like the position trade here. From a strategy perspective, what you thinking here?
Just a straight, shares.
Just straight shares on the
Options,
break?
yeah, options aren't the best, but I mean, if you do buy shares, the options aren't too terrible where you can sell covered calls if you want to.
Yeah,
So, you don't have weeklies, which would be, a determining factor for a directional option play for me. Just a
yeah.
hard rule for myself. But if you do buy shares and you would buy over 100 shares, you definitely can sell covered calls. So that's
Especially
not
if you're thinking
Yeah.
position.
correct.
Yep.
Yeah,
Yep.
especially if you're thinking position. I like them both, Frankie. Both good swing trade setups. One a flag, one a base on the multiple time frame on Hudson Bay as it
Oh
deals with
yeah.
that weekly chart as well. You got Comerica on the journey back up into that triple top at 100. What's your thoughts? I think Comerica is probably the cleaner of the two, but I like them both.
Yeah, I do like them both. And it probably depends on what you're looking for. Like I really do appreciate the Hudson Bay position play
Yeah.
because I love those charts, right? The only thing I was waiting for you to do is draw the eyeballs and the nose on the monthly chart. But I guess that's just a me
That's
thing. I guess
I do
that's
I'm
just
have
a
the
that
me
on
thing.
longer
mine.
term U shape. Yeah,
Yeah,
yeah.
I guess that's a
Little
me thing.
smiler, little
Yeah,
smiley face.
smiling, getting
Yeah,
give me that smile. So I really do like it from the position side of things. If I'm fighting, swing versus swing, though, I got to stick with Comerica.
yeah. Gotcha. What about you, Bobby?
I do like Comerica, but for I'm going to stick with my pick. But
Yeah.
overall, for the finance sector, I mean, there's a lot of great plays. I mean, Frank did mention that. I mean, you have Bank of America that looks good. J.P. Morgan. I mean, there's a lot of choices within the sector. For me personally,
Yeah.
but there's not too many, on the material side that I've personally found. So I'm going to stick with, materials, just, have that kind of, diversification in my portfolio.
Well, the only reason
Metals
we
have been
can't is
good.
because
Yep.
silver's just ran a little too hard here today.
Yep.
I'm
Yeah.
willing to bet there would if we were still doging underneath that breakout channel, I'm willing to bet there was going to be a fight who was going to pick silver.
Yeah, probably.
Yeah,
And spoiler
yeah.
alert, I would have
But
won.
now we're all just kind of just giddy up, go, 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 go,
Yep.
go,
Yeah.
go.
Yeah.
I'm gonna go with Comerica. I think it's a little bit cleaner. But that Hudson Bay longer term story is very compelling.
Absolutely it
Very
is.
compelling. Um, all right, like it, team. Let us know which one you like either in the comment section later on tonight when you watch Trade Masters, or let us know there in chat which one you like as well. All righty, Frankie, you went round one first. Let's switch it up a little bit. Bobby, round two. Which one you going with?
Yeah, I'm going to jump in the healthcare sector and go with Waystar. The main reason I like this, not only just because you have a great technical setup here, a nice little flag, kind of like a Cody special, inverted Cody special, I like to say. You got the break, now you're,
Just
coming
really
back.
quick, Bobby, just to make sure that everybody understands, we're not talking bullish on Waystar here. Just,
Yeah.
just want, just wanted to make sure everybody understood that one.
Yeah, no, for sure. I mean, you do got you got your break lower, retracement back up, flag back up into, that old, support zone. Definitely, if someone's trying to look for some bearish delta, Waystar is definitely a good setup to, do that. Perfect. It hasn't been around a long. If you go to the longer time frames, um, it was bullish for a while. It was kind of sitting sideways until you got that break there. But when you got on this long term chart,
It's a
you know,
nasty
there,
long-term look.
very nasty. So there's not
Yeah.
much, not much till you get down to maybe around the 28 zone. I mean, you could debate, 30. There's some, junk there, but I would
Well,
say around the 28 zone would be um, definitely where you would probably, get some trouble at. But here options aren't the best, so I would pretty much stick with more of a stock play as well on this. Add some, bearish delta with some stock. Um, Below today's candle would be my entry. Now on the stop side of things, you could go above today's candle, or you could go above the pivot candle, which I think it was on Monday on the
yeah.
15th. So dealer's choice on there. Just depends. A lot of times I like when I have that kind of, setup where it's, you pick and choose your, stop loss. I do like to use the intraday charts like you mentioned
Hmm.
previously, like going to the hourly and just seeing what it looks like on there and, determining what's the best zone. So,
I do kind of like the upper level, but
yeah,
you could make an argument for a lower level. But when in doubt, grab pivot.
yeah. Yeah, I mean, absolutely. So for sure, put, stop above the, that 12-15 candle. Target wise, I think you could definitely get a 1-to-1 risk reward right at that 30 zone. So I would definitely try to probably a little bit conservative, but, target around
Hmm.
that, pivot low there. into probably maybe around that 28-ish. So 30 by 28 would be my two targets. T1 would be 30 and T2 would be 28. But just a straight little, swing trade. The only reason I would cautious being more conservative because I mean healthcare, the overall sector doesn't look too bad itself.
Yeah.
So um it could reverse and go back up and or not reverse, but it could, change directions and then Waystar could go with it. So being a little conservative with bears is not a bad, option as well. And that I know that's kind of the approach I usually take with bears is I, tread lightly with them because I've been burnt millions of times and I'm sure a million people have
Right
been
out
as
there for a
well.
bear, they say. At least I say it.
So yeah, just a little quick little swing trade 30 by 28 for me. Using shares, options aren't the best, so I would just stick with shares on this one.
Bears get trades, they don't get trends
Yeah.
True.
Yeah.
in the market.
It tends to be I
Yeah.
think that's fair.
All righty. So we got a short setup swing trade on Wayfair for Bobby in round 2. Entry under using personal rule underneath today's low as that gets you underneath this week's low. Stop loss playing the pivot with the target of 30 by 28. 30 is a significant whole number. I will debate you on that until the cows come home, Bobby. 28 is the principle of polarity, old resistance, new support zone. Nice trade setup there. Frankie, last pick here. What's your thoughts as we complete Trade Masters here on Hump Day this week?
Listen, I got to go with somebody who's also hasn't been doing great, but maybe they're ready to turn their life around, and that's Robert Half, RHI. This guy is intriguing. He's an intriguing character here. He's been in some hard times, as you can see, looking at that chart. Not been a good road for poor old Robert here. But I got a feeling, Robert's wanting to turn his life around here. And if you kind of come into the weekly, you can kind of see we're now punching up into the moving average pocket, which is simply there's just when you see big moves down like this, right? No real price action tends to develop as support and resistance levels. And so it's kind of, for lack of a better way to put it, low hanging fruit. If we can get into the pocket, there's really no reason not to try to fill the pocket. That's kind of the idea here, right on old Robert Half. We've really been coming back into the daily. So kind of that gives us kind of that context where we're into. And that's going to be important because that 20 weekly is going to be, I'm going to bring up a couple targets, but as Team Tackle knows, a lot of times I have a real target, and that is the real target, right?
Yeah.
That's a tough battle to win. I expect that to be all that this is, but that's how every reversal has to start, right? It's got to get to that fight and then win it. And if it does, well, there's another leg to the upside potentially. So coming back into the daily chart, though, this is where I think the structure gets really intriguing. Now, knowing I'm punching into that moving average pocket and I don't have to fight against that 9 weekly, and I don't really have a lot of price action until that 20 weekly, this is what Mark and I and a lot of the team refer to as a pinch on this daily time frame, right? The most common pinch is going to be the 950 pinch, and that's exactly what we have here. We've got the falling 50, the rising 9. Something's got to give. Either it's given up the 9 EMA or it's given up the 50 SMA, and it doesn't have a whole lot of time left to decide, right? Those two things get to the same place and the world blows up or something like that. So we are in full-on pinch territory. We've already punched our nose through the 50 and that 9 weekly. Great scenario. I love the close of this candle because by rule for me, on a pinch, you got to close above the 50 if the resolution's to the upside. I know not everyone has that rule, but it's a big deal for me. It has to close the 50, right? Well, it did do that here today. And so now I can just look at the price action. Okay, today's high was 28.43. We had a 28.43 back on Monday as well. So I just need follow through over today's candle. And by my own rule, I'm officially in the moving average pocket. My pinch is confirmed. I'm in the moving average pocket. Also by rule, I got to have the 9 EMA working for me on a pinch. Well, it just so happens that today's low is going to line up nice with that as well, right? So it just so happens that I can really build off of today's candle. That is not super normal for a pinch, by the way. That just is the way that this one played out. So you're just in over the
It
highs,
aligns
28.
really well.
It lines up really, really nicely. I've got my first punches into that 9 weekly, right? Weakening that thing. So just need a little bit of upward movement over this today's high, 28.43. Stop loss would be underneath this level. You can give it more, but you usually have to give it a lot more. And I would just rather tap out and reassess if it comes down far or much below that 9 EMA. I'll reassess if and when it gets back above the 50. But for the pinch itself, this is just this is a frank trade, right? You play the close of the 50 plus the follow through, stop under the 9, target, real target is the pocket, which puts us right around $31. It's a little bit north of that, but it will fall down. So I'm kind of estimating that 31 is a fair guess of where that 9 will, or that 20 weekly will ultimately end up being, which still puts us, close to a 3-to-1 risk to reward ratio if that's all that it has. And again, I think I will have a target beyond that, but I promise you, if it gets to the 20 weekly, you do a scale out, you get risk off, right? It's a little, okay, leaving a little change on the table in case it does power through that next level. And if it does, you do have a fairly clear path into 33. So I would officially call it 31 by 33 for targets, but really, and this is important when you're targeting moving averages and pockets, they're going to move, right? That 20 weekly is going to come down. And so it will be in a different location based off of how fast it gets there, right? If this happens over the week, 31 is probably fair. If it takes 2.5, 3 weeks, it might be closer to 30, 50. So keep an eye on that 20 weekly as things go on these type of scenarios. That's the target, the real target, right? If we can win that, we can talk, new things, but that's really the target. So you could go 1-to-1 and then target to 31. I'm targeting to 31, knowing that that's the scale, the close, get all of the risk off, all of that fun stuff, and see if it can win that fight with a small percentage of the position, because there's a pretty clear path from 31 to 33 if, and I think a big if, it can get through that 31 or that 20 weekly.
Well, I mean, it is a big if because all year long it hasn't gotten through the 9 EMA. And that's why I kind of feel like that really stands out here today.
Oh, yeah.
Given the fact that every time it's got into that 9 EMA, it's got blasted. That's why you're closing right here at the 9 EMA, entry above that high of today. That officially gets you into the pocket. And, it's there hasn't really been a pocket that didn't get filled here whenever it did get above that
Yeah,
9.
never did. Yeah.
A little bit of a different analysis, but still, I really like this little double tap on the daily, weekly time frame here on both the pinch on the daily and the pocket on the weekly. It just so happened that pinch lines up with the pocket, but when it does,
The
it
best
does
pinches
create
do,
a pretty
bro.
decent little setup there.
The best pinches
Really
do.
like the pick. Frankie, what's your favorite pick of the 4? CMA, HBM, RHI, and the bear trade on way.
Ooh, man. I'm not coming off of one of my names. I love me a pinch. I love the resolution of pinch. I know that every reversal story starts with this type of analysis.
It
It's
does.
hard to win multiple fights, but boy, when you do, even a quarter of the position can feel really, really nice.
HBM had to win this same
I
fight
remember
earlier
when it
this
was at
year.
$7. I know a lot of team tackles remember when it was $7, rolling from 7 to 10. We thought we were big timing. So, yeah, but in my heart, I'm a momentum type of guy, so I gotta
CMA.
stick with CMA.
Gotcha. So you like the momentum flag on CMA? Same question, Bobby.
That is a tough question, but I do love the long-term story on HPM. I just, I love, how, it ran like you're showing here, it ran from $6 all the way up to 18, and it's doomed to go from 20 or 19 all the way to 40. So I definitely like this long-term story, and I want to be part
Yep.
of that.
Love it, love it, love it. I think I'm gonna have to go with the bottoming on Robert Half as well. RHI. It's a very compelling technical backdrop. But all 4 of these are really, really good technical setups, and it goes to show you that even in a choppy market, there's always going to be good trades out there, especially
Always
when we're
trades out
not
there.
seeing sell everything. We're seeing rotation right now. All of these are rotation candidates, and like the pick here, boys. Why don't we give some final thoughts here?
Yeah, I guess I'll go first. I think you nailed it though, right? This is a trader's market. And when I say that, I mean we don't have, we when we're in the all everything's going up, those are fun markets because you always kind of have the wind at your back, right? It's not really that right now because of the weakness that we're seeing in tech. That can get cleaned up, but at the very least, it's going to take a little bit of time
Yeah.
to do so, right? So it very much is you go out and you find your areas, you find your good, clean, good risk, high reward, right? Scenarios that you can actually comfortably manage. I don't need too much on a CMA to get my stop to break even, right? And then
Yeah.
only good things can happen to me, right? I've got good things going on with the chart, good things going on with the sector. Don't try to force it. I want the I'm as interested as anybody in the inevitable tech bounce, bottoming pattern, whatever you want to call it. But it's going to happen when it happens, not when I want it to, right? I'll track it day by day, but until it tells me to do something, I'll just track it and wave at it and go look at other things, right? So continue to track it, of course, but don't try to bully your way in. We don't have enough money to do that, right? We don't move the markets. There will be an opportunity down the road in tech. Right now, there's opportunities in other areas. So, see a trade, take a trade, ABT, baby.
Love it. Love it. What about you, Bobby? Final thoughts?
I think I don't know if it was Frank or one of the coaches mentioned, everyone wants a pullback until they get a pullback. And I think, you are getting a little bit of rotation here. And usually that sets up for opportunities for, either cheaper stocks or, an opportunity for a nice swing trade at a lower price. So, like I've always talked about in the options report the last couple of weeks, have a plan and trade that plan. And so if you've been following and mapping out the key levels here on this chart, I mean, you won't be surprised on where it's at. So, find those opportunities and try to capitalize them, once you do get that turnaround here.
Love it, gents. Really appreciate your time and your wisdom here in Trade Masters here today. Team, you love Trade Masters. You know what to do. Hit that like and share and help us spread the good word of tackle trading and Trade Masters into other amazing traders out there as well. With that said, I hope everybody has a wonderful, wonderful day. And if you need anything from Tackle Trading, you know how to hit us up, but get us at Team at Tackle Trading. Hit us up in Discord. And if you once again have not registered for the Tackle 25 webinar next Monday night, the link is in the description below, and we're going to have some fun there as well. Team, have a wonderful rest of your night, and we'll see you tomorrow in the Traders Lounge.
Awesome. Later, team.